Welcome back to the channel. I'm Foreman, and today I'm going to be talking about the UK stocks I'm buying right now. And if you like the series, please drop one of these to help beat that YouTube algorithm. It is much appreciated. There are a few changes I'm going to make, but I'm going to talk about them in just a minute. The FTSE 100, according to Google Finance, is actually up 0.97%. The FTSE 250 is down 1.91%, and the S&P 500 is up 1.1%. My portfolio has yet again underperformed on a weekly basis, and it has dropped by 4.71%. However, as I have said countless times before, volatility does not concern me. At the moment, the story hasn't changed in my investments. My conviction is still high. I built this conviction up through detailed research and consistent analysis of my holdings over a longer time period. And so I have no doubts in the companies I have. Sure, their valuations are at a question. We're going to see, okay, what kind of a premium will they trade at? Will they become undervalued? And during this time, I'm looking to buy a lot more. I mentioned earlier I am going to be creating a second smaller portfolio that I'm going to add to this series, because at the moment it's getting very, very bland. If I'm talking about the same 4 or 5 stocks each week, I can completely understand as to why you would not want to see that. So what I'm going to do is my ISA portfolio will be the main portfolio, the main things that I talk about. However, I'm not going to repeat the same bullish story that I have on each of my holdings. Instead, talk about the relevant news for each of the updates, whether I've bought any more, what my average price is and what my returns are, and then leave it. And then if you wanted to find out what my bull case was, you would then get referred to another video. In particular, I'm going to be creating a second smaller portfolio inside a SIP shelter, self-invested personal pension or pension plan. I always forget. I'm going to be creating a more dividend-focused portfolio. The amount of deposits I'm going to put in this is really not going to be much, because I would rather maximize my ISA allowance as I plan to retire early and draw down on my potential investments a lot earlier before the age that you were able to withdraw from a SIP. So what I will be doing is putting a small amount of capital in there. I will be starting this in the next week, buy a few dividend stocks, and then hopefully we can have loads of topics and companies to talk about. And just so you know, all my income from the stock analysis requests, which is a link in the description down below. So if you'd like to see a stock analyzed on the channel by myself in a public video, then click that link in the description down below. At the moment, it's only £15 or $20 odd, because it doesn't let me charge for £15 as I'm using a different website. But if you'd like to see that, link in the description down below, and all the income from this will be directly reinvested inside my SIP shelter so that we can add to that portfolio and really build it up. Obviously, the top faller in the portfolio this week is the one that has been really outperforming lately. This stock is Boohoo. Boohoo shares have dropped another 11.65%. My total position with Boohoo is now down at 24%. Although this is not the first time that my shares in Boohoo have been down this far. In fact, when I first started buying into Boohoo in roughly around July 2020, I remember when we had seen that drop due to the ESG concerns and modern day slavery allegations, and we had seen the share price drop from the high 300s all the way down to the low 200s. And then the next day it bounced back up to around about £2.70, £2.90 maybe. And I remember buying at that moment thinking, oh God, it's going to race back out. I don't want to miss out on these gains. So I bought in. And then the next day it dropped back down, and over a few more days it stagnated roughly around about £2.20 per share, or I believe £2.17 to be precise. And obviously my holding was down quite significantly at that period of time. And so I have little to no concerns. In fact, I'm more researched than I was at that time. I am very much bullish on this company. And if you're interested in my thoughts on the likes of Boohoo, and it's all up to date, then click the card at the top right of the video. That is my Boohoo stock analysis. Save that one for later. But yes, I've been buying a lot more shares this week because I significantly want to average down my position with this company. This is my second highest conviction stock. I'm very bullish on e-commerce. I'm very bullish on their business model, the whole test and repeat business model, where they are able to test some of the products, see if they sell well, and then ship in a lot more. Obviously, we've got that medium-term effect that is currently ongoing and impacting
two of my companies due to higher freighting costs. And at the moment, I believe cotton prices are at a decade high, which is certainly going to squeeze Boohoo's profit margins, although they have pricing power. So we could see them rise prices of their clothing items, and that would be very interesting to see. We've also got the ongoing court case. There has actually been an update on that, and I've got to thank a regular viewer and long-time subscriber, Malk. He has really kept me up to date on the court case by sending me the links on the Twitter. From what I've read, there's certainly quite a case going on here in the US. This is the one that threatens to fine up to 100 million US dollars. The idea here is that basically Boohoo don't intend to sell at their reference price. Their reference price is the original price of the item. So let's say you wanted to buy some denim, this shirt actually in particular, Boohoo Man polo shirt, right? And this was £20, but there was a 50% off sale, then it would be at £10. However, Boohoo's business model means that they regularly have sales. And in fact, I really like it, and I'm going to hopefully learn from it, because if I create a business in the future, I'm certainly going to be creating a lot of sales and going off of a similar business model that Boohoo uses themselves, or at least not in this industry, though I don't really want to be selling clothing. Regardless, I do think that because of their reference price and the way they do their sales, and their sales run like every day, it's always 30% off, maybe an extra 10% off if you use the app. I can see why the US court case has obviously got some concerns with that, because it is quite misleading. And in fact, I have bought quite a bit on Boohoo in terms of clothing. I'm not sure if that's because I'm quite a big investor, at least relative to my overall net worth, or if it's just because I'm enticed by the sales. I'm not sure. Perhaps I'm just trying to change up my wardrobe because I've had the same awful clothes from about the age of 13. Who knows? But regardless, I can see this. And what they'd done is that this gentleman that had bought the clothing that had started this case, 90 days after he had bought, and this was on the sale, these items that he had bought had never returned to that original reference price. So that shirt that he could have bought for £20 at the reference price, it never returned to that value, hinting that perhaps Boohoo was never intending to sell it at that much. Although what we can see usually with Boohoo is as they get new items in, they start at a regular price and then they continually mark it down until they sell down their supply. And if it's a popular item, they'll put it regularly on sale. I do like that. I think they're very aware of their consumer base, and so it makes sense. So this week I've bought quite an extraordinary amount of shares. I've bought 602 more shares with further plans to acquire as much as I can, really, and I'm really trying to push down my average price. Sure, shares currently at the moment are dropping into the £1.80s region. My average price last week was £2.55 and 22, which is basically £2.55 pence. And now this week, my average price is down to £2.47 for, it's really annoying to say multiple digits in a price or in currency. And I'm really going to try and push this down. My target is to try and get my Boohoo average share price down to around about £2.25, but that would require significant investment. Although I do think shares could be down for a prolonged period, and so I'm just going to continually keep pushing money into this. Although I did try to be careful. Yes, I sold completely my Ashted Group position. I sold the remaining 8 shares of this stock because I asked myself, at this current valuation of roughly £56 per share, seeing that they aren't getting multiple digit growth, or they are getting high single digit but not double digit, I wanted to know, okay, if I had the cash available, would I buy shares of this stock? Simply put, my answer was no, and so I sold that position. I reinvested this money back into Boohoo, and so what I've tried to do is try to be patient, because I've done this before where a share drops, I'm eagerly averaging in. This might have even been like with Argo Blockchain. I'd eagerly be averaging in and then wait, oh no, shares have dropped another 20% a month down the line, and oh wait, I've used all my capital trying to really take advantage of that dip, and I never quite managed to really get the discounts in. I'm not sure how long Boohoo shares will drop for, because I don't think it's justified. So I am going to be buying quite a high amount, but I also want to be careful not to be buying too much each month as well, or at least each week, because I get paid on a weekly basis. The other stock that I have bought this week is actually the likes of Games Workshop. Shares are really coming down to quite an attractive valuation now, and this is all fueled really by their very bland trading update and their slash of their dividend. As I've said before, I like that they've slashed their dividend. This is very much a positive thing. This slash of dividend means that they're only going to be keeping truly surplus cash rewarded to shareholders. But at the same time, that means they've got more money that they can reinvest back into their own business. And I think what a cool idea would be is with their IP, there's a lot of content creators and fans in obviously the community that are providing content, and the way Warhammer or Games Workshop has dealt with it supposedly isn't that great, and they've tried to censor it and block it down. But if they were looking just to acquire some of the ideas, this could be a great way to boost morale in the community, and maybe it would promote more members to create content for that Black Library. And even you could look and go, you know what, actually we should hire this individual for a job. Obviously Games Workshop really are not going to see this video, nor are they going to even think about what I've said, but it would be quite a cool idea to see. And I think if I was personally managing this company, I'd certainly be looking to do that. At least creating some incentives or rewards and really trying to engage back with that community, because at the moment there is an alienated part of the fan base that certainly has their concerns with the company and the direction it's taking in trying to invite new players. And so obviously there is a little bit of a concern there. I think it's a fantastic company. You know this, I've said this regularly, and basically with the amount of shares I have, I want to top up more because it is my highest conviction stock, and I do want some more diversification. Boohoo competes for your money. Games Workshop also competes for your discretionary spend, but it's more of a hobby. So Games Workshop is usually the first in line because that's what you want. Sure, you could say clothing's a staple. It can be, but once you've got clothing, you don't need to necessarily buy more. With the hobby, you're going to buy things that you enjoy. Hence why I think Games Workshop, obviously they compete, but then Games Workshop competes for your time. It's entertainment. They want you to be playing the game, so they want you to be immersed in a universe. And so obviously I had to really blend that out. And this is actually why I've been trimming down my position with Team 17. Team 17, in my opinion, is a fantastic company with good growth prospects. Sure, it could be a bit difficult for them to really build a substantial moat, but I thought that their wide, diverse catalogue of smaller indie games would be a great way to get exposure into the video gaming industry. But with Games Workshop and their royalties, I feel this is already giving me that somewhat exposure. Sure, Games Workshop's royalty income is actually really low at the moment, and so it is a bit weak and not really that much of an exposure, but I hope over the longer term that we may see more video games like Total War Warhammer 3 and others start to release, gain more popularity, and really spin users back into the player base. And no, that's a temporary tattoo, do not worry, I've not done that to myself. I've been just trying to trim back the shares of Team 17. I've not made any real profit, whereas at least when I sold Ashshare Group, I'd gained roughly 120%. And honestly, that was a massive fluke when I first bought the shares. Now I'm just like, right, Team 17, Games Workshop, they both compete for your time. I'd rather hold one, and then I can look to possibly opening another position another time once my core holdings are perhaps recovering and have less value. And if you'd like to sign up to my stockbroker Freetrade, you can actually get a free share worth up to £200 when you use my link in the description down below. And then we've also got the likes of Argo Blockchain. This one has certainly been doing well, weak for a bit. Obviously, earlier in the month, they pushed up very well with that NASDAQ listing and all that hype. And then they said that they were going to be diluting the shareholders, obviously, with that NASDAQ listing, and then got a little bit more capital funded. I'm okay with this. I very much questioned the short-term debt loan facility that Argo Blockchain did take when they had access to that Texas facility, credit facility. That's very, very complicated of a sentence. I'm surprised I didn't stutter. The point is they took up a very aggressive short-term Bitcoin-backed loan. And what I didn't realize at the time is that this was only really a 4.5% interest rate. And obviously because they knew that they were applying for the NASDAQ and they knew that they were going to raise that capital, it's certainly a lot less riskier. Although at the time I didn't know that. And so that certainly did hit my conviction a fair amount. At the moment, I'm really questioning, do I want to be buying more shares of Argo Blockchain? My position size is already quite large, but at the same time, like I really do probably need to lower my average share price if I want a good position for the longer term. I don't doubt Argo Blockchain will continue to do well, but at the moment with Bitcoin rising, Argo Blockchain really isn't following that trend. So it looks like we're going to have to wait for the lockup period to end and really see where shares move in the future. But I am overall bullish, and in fact in their September report they had announced that they had actually mined 165 Bitcoin. Yes, this is down from August with only 206 Bitcoin, so they're down by about 38. But that's okay because the difficulty is likely increased. Again, I've not checked the charts because I really should get checking these charts. I know that a few of you have pointed that out before, and I keep making that silly mistake. We've also got the year-to-date mined Bitcoin of 1,479, which is pretty impressive, and their overall hodl, considering they did sell some back in the last month or so, of roughly 1,836. I like to see them building up this asset. I like to see them building up their total hodl because I feel that this is a double whammy effect. Double whammy. But yeah, basically the idea here is that yes, they're earning their money, they're earning their income from mining this Bitcoin, but then they're adding it to their hodl. And this hodl is at the moment an appreciating asset. So it's almost like you're getting, yes, they're mining well, they've got high margins. Obviously, they're going to cover their depreciating assets, which is roughly £800,000 per month, which is quite high. But then once they've done that, that goes to their hodl. And then as their hodl increases, this provides two different ways for the company to get higher financial or underlying fundamental value. And it's certainly something I like. I like this exposure. Admittedly, yes, as I've said before, I had too big of a position size. So it will be a case of really debating on whether I should be averaging this down. But then let's say Boohoo, let's say Games Workshop shares both recover, and we're talking near enough to their all-time highs, or at least near to their yearly high, roughly by 10%, I would then be looking at Argo Blockchain. I'd definitely be looking to open a new position again, but Argo Blockchain would be one that I'd be putting a small amount of funds in consistently, just to lower that average price and get good average cost for the future. As I've said before, I'll likely trim back the position once I'm in the profit to de-risk slightly and have some cash in the portfolio, because that is a lesson that I really need to take. I've been reading The Art of Execution, and in this book they really do highlight of taking the advantage, having a plan. Your stock drops by 20%, what are you going to do? Well, are you going to sit there and do nothing and be a rabbit? Are you going to sit there and sell immediately, cut your losses? Or are you going to be a hunter and really try and buy the dip? But you can't buy the dip if you don't have cash in your portfolio, which is why I'm having to sell down the likes of Ashted Group and Team 17. So obviously we do have those concerns there. And at the same time, I'm not really depositing as much more money because yes, I had been spending it going out, but now times have stopped. I went out Friday night. This is now Saturday as I'm recording this. Went out, honestly, didn't spend that much at all, considering I usually spend triple digits when I go, and it's now actually good. So I'm going to cut down. It's time to go into monk mode that I've been saying for so long and really push on, because at the moment, I'm very much motivated to continue with this YouTube channel, and we are seeing some excellent progress as well. I thank you all for watching. I really hope you have a fantastic weekend. And if you're interested, check out my free UK stocks to buy right now, and that card right there. Have a good one.